Thank you very much to Mark. Next, I'd like to introduce to you Sandra Rowe. She was in the panel discussion earlier. Sandra is with the Chicago Mercantile Exchange. She serves as the executive director and head of digitization there. She's responsible for the company's digital assets and blockchain distributed ledger technology initiatives. Sandra was recently named to the Innovate Finance Women in FinTech 2016 Power List and holds directorships and founding memberships on several industry boards, including the Global Blockchain Business Council and, as you saw earlier, the Enterprise Ethereum Alliance and a few others as well. Sandra holds an MBA in finance from London Business School. She studied computer science at Columbia and received a double BA in history and studies in the environment from Yale. And get this, she specialized in that BA in the proliferation of biological and chemical weaponry in the 20th century. So please join me in welcoming Sandra Rowe.
Good afternoon, everyone. First of all, I'm going to talk a little bit about trends in the market. I decided to actually take what I normally talk about and repackage it a little bit for this audience, and also for the sake of some of my partners in crime in the blockchain space who've heard this presentation many a time. And then I'm also going to talk a bit about CME's experience in the last couple years and talk about a few production-ready type products, use cases that we're looking at. So hopefully it'll give you a flavor from our standpoint, a market's view on what is happening in the blockchain space. So 2017 macro trends, I'll talk about a few trends that I'm seeing in the market. Take this off. And then, so what? Not everything is solved by a blockchain, but the blockchain potential is pretty big. So I want to give a balanced view on that as well. So you've heard this morning. No need to bang everyone's, head against the wall about this, but the reason why financial services are so excited about blockchain is really focused at the moment, laser focused on post-trade efficiencies that can take out billions and billions of dollars of savings. That is the main driver. There are regulatory and real economic reasons for why there is a current fixation on blockchain DLT efficiencies, right? And many of these institutions are looking at different areas. They're looking at payments, they're looking at settlements, they're looking at reconciliation, they're looking at reporting, they're looking at trading, they're looking at trade finance. There's tons of use cases. From a CME standpoint, many of these firms are our clients. We have one of the largest clearinghouses in the world, and we're connected to over 70 bank and non-bank clearing members. And so in many ways, the position that we take in the market is very different, as market infrastructure is very different than some of our bank clients. And a lot of our blockchain-driven use cases are actually led or initiated by our clients' needs. And so I'll talk a little bit about that as well. People say that there's been over $1 billion invested in the blockchain. I actually think that number is wholly underrepresented if you think about how many teams now exist within each financial services that are quote-unquote blockchain teams or innovation teams or digitization teams. These teams didn't exist 1 to 2 to 3 years ago. So with that proliferation alone, that's an investment companies are making in people and resources. That number has got to be in the multi-billions at this point, if you add it all up globally. Here are some use cases. I've highlighted the ones where CME is focusing a bit of time. There's certainly more, but I've just kind of categorized them into, buckets. For us, there is a very interesting use case, set of use cases that we're looking at in digital assets, which I'll cover, as well as I mentioned, with one of the largest clearinghouses in the world, we are spending a lot of time on the post-trade reporting settlement area. So, and that was one of the first trends that we're noticing is the continued investment. So trend number 2 is something that's been discussed by a number of the parties this morning, which is Consortia. And CME is right there in a number of these. I have not certainly listed all of the consortia that are out there, but I just took logos of the ones that I could remember off the top of my head. But there are more. Some of these have just started. 2017, a lot of them launched. This proliferation is probably going to continue. Over time, there'll probably be consolidation. There's certainly partnerships already across many of these institutions. And these organizations actually have very different purposes. Some are financial services only, some are industry only focused on blockchain, and others cut across fintech, government, regulators, and industry. And each of these have a specific purpose, whether they're interfacing with regulations or whether they're actually building tech. They all serve a purpose. So for the time being, CME is a member at sort of governing board level. We tend to go in at sort of the core if we're going to go in at all. Our philosophy is that we will contribute, if we can't contribute in a tech way, we'll contribute from a regulatory and financing point of view, which, you know, does mean that we put some skin in the game, ultimately. Trend number 3 that I've noticed is obviously this whole idea of the internet enabling many things. And people say the internet's broken. There are many things that need to be improved about the internet. But if you just take the basic concept of the internet and you add mobile phones and you take blockchains, what can you do that's really exciting? Well, greater access to financial services. And this covers everything from the quote-unquote banking of the unbanked. I always say, actually, they don't need to be banked. They actually need financial services access, and that will happen through the phone. And this is for the developing world, as well as structural changes that are going to be happening and paradigm shifts that are happening in the developed world. This is a global phenomenon. So I take this Cisco slide and I take it around the world with me because I still find it very jarring that more people will have mobile phones, and it's probably the case right now. More people have mobile phones than they have running water or electricity in their homes globally. It's pretty staggering. So what happens in developing nations? Well, it's like what happened with telcos. They skipped the landlines altogether and moved straight to mobile. Well, with the mobile phone activity and adoption, and if internet penetrations continue as they do, you'll see financial services on people's phones. And that ability to have apps on the phone where people can hold certain amounts of wealth, and whether that wealth means $10 or $100 or $1 million, it's pretty powerful in being able to reach all of those billions of people who may hold a phone but no bank account. Trend number 4. Convergence of technologies. I think a lot of people here this morning have alluded to this as well, and we're beginning to see it accelerate. So what happens when you've got IoT, artificial intelligence, machine learning, quantum computing, blockchain? It's actually mind-boggling and a bit disorienting if you really think about all of the different technologies which are converging upon each other. What happens? I think we're still trying to figure it out. We're talking about significant paradigm shifts here. It's not just about the decentralization of financial services. It's actually breaking models and paradigms across industries. And this is what's significant about this. It's not just about blockchain. Blockchain has a huge, huge part to play, but there's bigger fundamental things going on here. We're seeing titanic shifts in the way infrastructure and the way people interact in different industries, and that will be a major impact over the next, I don't know, several decades, who knows. But it's going to take a while. And when you're talking about deep core infrastructure, and this is the interesting question I always get about blockchain, people say, well, when is DLT, when is blockchain going to get real? And it's a valid question, when is it going to get real? Well, actually, it depends on what you're talking about. If you're talking about the deep core infrastructure and you're asking people to take out existing things that work today, where billions or trillions of dollars flow through, no one's going to rip out those pipes overnight and put in something new that's not been tested. That will take years, maybe even decades. However, if you're talking about the upper layers, you're talking about applications, or you're talking about digital assets or tokens, that could be a lot more quicker and lightweight. Why? Because you could build new infrastructure. And when you're building new infrastructure that doesn't exist, it's a lot easier. So I think, we really need to make sure that we get granular about what we talk about when we say blockchain or DLT. In what application and what use case are we actually talking about here? And then finally, I'm going to end with this note because I do feel like financial services institutions, for the most part, gloss over this, and I think this is actually a pretty significant trend, especially from a trading perspective. And there have been a number of questions today on cryptocurrencies or crypto assets. CME takes a very different view than a lot of financial institutions. We do believe this is the advent of a nascent asset class. It's not correlated to anything else, has several subcategories. I think what's really going to be interesting is not only the crypto, the pure crypto, for example, the Bitcoin or the Ether or the Litecoin, but the tokenization of physical assets. So when you tokenize barrels of oil, bushels of wheat, cattle, bars of gold, what can you do with that in a virtual trading space? You can change the nature of trading. So that is yet to come. I've just put up here the last, I think I took this off actually 2 days ago, the top 10 cryptos that are trading by market cap. It's not insignificant. Compared to the FX market, which trades $5.1 trillion a day, yes, it is small. But when you think about where it was a couple years ago and where these are trading now, it's fairly significant in terms of market cap. $30 billion in all, I think, if you add up the top, 10 or 20. So what? CME Group's perspective. Well, for those who aren't familiar, we're an amalgamation of a number of exchanges, the Chicago Mercantile Exchange, the CBOT, NYMEX, COMEX, which means, and we also have a clearinghouse as well as a trade repository sitting in several different locations around the world. That means we cover not only the trading, but the clearing and the reporting of listed derivatives across all major asset classes. So metals, agriculture, energy, financials, U.S. treasuries. When you hear on CNBC, futures are up or futures are down, it's probably most likely one of our products. But how did we start? Well, we started because a bunch of farmers needed price transparency and to be able to lock in pricing on their egg, butter, and wheat. That's ultimately how it started. And that humble beginning is something that we still carry through in our culture, which is price discovery, price transparency is a good thing. And that's a trend that we're seeing more and more. People want transparency. People want assurances that what they have, what they own, is valid and can be confirmed. And we've gone through our own changes as well. The evolution has been going from the pits. We closed our pits in NYMEX and COMEX at the end of last year. We have a very few number of pits physically traded in Chicago, but again, we're 90% plus electronic. The markets have moved and evolved, and we have moved and evolved as well. And so now, the screens look like this. And guess what? It's evolving again. This is the WTI options page. Well, imagine what the next trend is. The next trends are 24/7, 365, which is what the crypto world trades right now, and tablets and mobile phones, because you effectively have a supercomputer in your hand. So what happens to screen trading when that happens? Well, we have to fit it to fit tablets and mobiles. And if it does go 24/7, 365, it has huge implications on operations. We're close. We probably take about a day and a half off on the weekend. But closing that gap to no market open or close, that's a big question. And here's something that, just to give you a sense of where there's a bit of a push and pull from a tech versus business standpoint, the technology is available. UE can go 365, 24/7. But if you ask some hedge fund managers what they want, they don't want that. They like a market open and a close for a reason. And so when you look at the crypto market today and the fact that it is basically nonstop, you have to ask the question, is that a good thing? Do we really want that? We'll let our clients tell us that. And one day, as I mentioned, with the power of the mobile phone, we'll be able to extend our reach for price transparency to anyone with a phone. And that's ultimately, one of the prevailing goals that we have. And when I talk about digitization at CME, it's pretty simple. We're focusing on two major areas. One is digital assets and promoting the development and credibility of a nascent asset class. And then further to that is the post-trade DLT blockchain use cases that we're looking at. And that's deep core infrastructure. That's going to take quite a while for us to work with our clearing members, our end user clients, to find all of those efficiencies that we've talked about today and we'll be talking about tomorrow. So our ventures arm is just the last thing I'm going to mention on the slide. The ventures arm is independent. It does invest in DLT blockchain companies. It's invested in Ripple, digital asset holdings, or digital asset, DCG, which is Digital Currency Group, which is made up of a whole host of smaller startups. And it also invests in other areas like artificial intelligence, hardware, software, cutting-edge, leading-edge technologies that we currently don't use today, but we may in the future. But that is an independent arm. So let me just talk about a few things that CME's gone public about in the last couple years. As I mentioned before, we want to promote and support nascent digital assets that are emerging. Bitcoin is big enough now, it's still small, but it's big enough now where we've launched 2 pricing products, and you can find that on cmegroup.com/Bitcoin. And the 2 pricing products, one's once a day, the Bitcoin reference rate, and then the Bitcoin real-time index, which computes every second. And they do run 24/7, 365. The key thing here also to note is the fact that we've started collaborating with fintech firms. It's a clear departure from some of our earlier days of we will build it and they will come. There's a strategic mind shift there in the sense that now our view is promote open source at the base layer, which is why we're a member of Hyperledger and EEA and all the other good standard bodies that are trying to create standards around this technology. But also we're linking increasingly with fintech firms. We've met with over 200 probably at this point over the last 4 years. And we have a roster of fintech firms who we consider our partners. Some you will have heard of publicly and some you have not. And we continue to work with those partners to really foster not only their growth, but the fact that they're really good at things that we're not. And so we can work together to accelerate the production process. And that's one of the key things that we're starting to do. So with the pricing products, we worked with crypto facilities based out of London. And last November, we also announced that we're partnering with the UK government to launch a digital gold product called Royal Mint Gold. And that also, we announced the partnership. Hold on one second. And that we announced on the 11th of April. Our partners are BitGo out of Palo Alto, California, and Alpha Point, who's based in New York. They are working with us to create different pieces of the infrastructure for this new network that we're building around RMGs. We've basically taken the bits of Bitcoin Core that are really sound and valid, and then we've turned that. We've made a number of changes architecturally to accommodate for the business needs that we had for this new digital asset. And it's called Prova Chain. It's been open sourced, and it's the first use case for this chain. So if you're interested, you can go to that website. Here's another interesting model I just want to highlight here. In a typical clearinghouse exchange model, what happens? Everything is concentrated by one party. What about a new world where we have just created a network, which by the way is going to go live later this year, it's in testing right now, where there are different actors. There are centralized processes, absolutely. They're still centralized processes. So for example, the Royal Mint is the only issuer of the RMG, and CME is handling the trading platform. But the network itself has other actors in it who do different things, and they all have different roles. It's a hybrid model. It's decentralized, but they're centralized nodes. For us, this is where, this is the experimentation that's going on. This is where we will tweak and evolve as we grow this network. But it's a pretty significant departure when you think of most institutions just concentrating and centralizing all of their responsibilities in one place. So I just wanted to highlight that. And then I want to end with one or two slides on what's going on in metals. This happened in 2016. There were a number of really cool announcements in the metal space. Gold is getting disrupted. For those of you who are not metals traders, the London market, the London bullion market's been trading the same way for decades and decades and decades. It's OTC, it's bilateral, and it's largely controlled by the top banks. We're not the only ones who are doing different pieces of disruptive product or processes. You've got Paxos and Euroclear. You've also got Tradewin Markets, which is a collaboration spinoff of IEX and Sprott. They're going to have a new gold spot platform based on a blockchain. So there's many instances coming of disruption in the gold market. And this was alluded to this morning. We're not even, where are we now, in April? We've already had 3 announcements in the commodity space. And this is something last year we saw as a trend that was going to explode, and it's starting. The fact that you've got announcements around crude oil, whether it's crude oil financing or it's digitizing the bill of lading process, which is the very paper-intensive process from port to port. These things are significant because they are a trend, which means beneath the surface, it's like the iceberg, right? What you see, but beneath that, there's so much more going on. And I fully believe that there is a lot of activity happening, and over the next few months, you will hear more and more use cases. IBM is involved in a number of these, and you see that there are banks involved in a number of these. But here's the other thing. Look at the collaboration. Collaborations are also key here. People aren't doing these by themselves. They are doing them in small scale, but they're doing them with either their clients or their tech partners. And then one that I found that I thought was interesting, which I don't know a whole lot about. So the cotton industry is trying to form a consortium for industry-wide adoption of blockchain. It seems very niche, but I think the cotton industry is pretty important. So I'll be looking forward to following what they do in this space. And then finally, CME is a place where you manage risk, and I wouldn't be doing it justice if I didn't talk about some of the risks to blockchain. I think right now, people are very excited about the potential for this. I think where things could go very wrong are where the technology just doesn't live up to the expectations of the multi-billion-dollar savings, or the scalability and security, or privacy, confidentiality issues are not sorted out. If these things don't get solved, I think we will have limits to what actually happens. And then finally, again, everyone's making attempts at standardization, making attempts at working together. This is truly a collaborative, does not respect borders technology. And that means that more people that you have, the more parties that you have, the more common it is at the base layer, the better it is for everyone. And that sort of benefit of the network effect is really critical. And then finally, regulatory. Anything with financial services, I don't have to repeat this over and over again because it's been repeated already, but you need the regulators on board. And I think this is an instance and an opportunity where the industry and fintech and government regulators can work together to actually build, as this evolves, that they come along with us as opposed to previous technology where they're constantly playing catch up. I think if we close that gap, it'll be for the better of a global, at least an attempt at a global standard and set of regulations. So with that, I think I'm done.
You've actually got a few more minutes if you want to do questions. Go for it. Yeah.
All right, I can take a question if anyone has any. And there is a question. All right.
So given the fact that CME is one of the largest commodity exchanges in the world, what's CME's position on the viability of cryptocurrency as a digital commodity? I guess in light of the recent SEC ruling against having cryptocurrency being the underpinning of an exchange rate.
Yeah, I think it remains to be seen whether something like Bitcoin is the winner or will prevail. I think, there's many other cryptos that are coming up. As I mentioned before, the tokenization of physical assets will have its own tradability attributes. I think we're very early days, but as I said, where it makes sense, we will come in and either create products and or provide support to the growing markets. It's what we do. That's why we're in so many asset classes. Sure.
So specifically with the gold markets where you have most of the gold traded today actually paper gold and not actually physical bullion, do you see with this trend being able to tokenize the actual physical asset, the end of that paper trading industry?
Yeah, you're talking about unallocated gold. That market is significant, absolutely. I think what you're starting to see here is you have to start somewhere, right? So you start with sort of the physical, digital, physical, and then it moves beyond. I don't think unallocated gold, the reason why people trade unallocated gold are for very specific reasons, and I think that will continue to prevail. How it gets affected by digital versions of the physical gold trading remains to be seen. But at the end of the day, what we're really looking at here is the digitization of pretty much every product over time, whether it's financial or physical. It's just right now, I think, the attractiveness of tokenizing physical assets. Because here's the other thing that I didn't mention. If you tokenize physical gold, and 1 RMG represents a gram of gold, all of a sudden, as long as you recognize something sitting somewhere, so somebody still has to verify that it's sitting in a vault somewhere, but you don't have to move it now. What if you could then post that as collateral in this new digital world very easily, and it's instantly recognized, instantly settled, and as long as that physical gold, if that's what the RMG is supposed to represent, which in this case it does, is sitting where it's supposed to be sitting and someone's verified that physical thing is there, you never have to move it. Move it at all. So there's one thing that I'm not sure if you're not a gold player, you wouldn't know this necessarily, but there's a huge trend going on the last couple years where people were literally taking LBMA 400-ounce bars out of London, shipping them to Switzerland, melting them down, and then turning them into kilo bars for Hong Kong because the demand was going east, where there was massive amounts of Asia buying and trading. Imagine how much it costs to do that. Melt down 400-ounce bars, ship it to Switzerland, and then ship the one kilogram bars to Hong Kong. What if you didn't need to do that? Oh, and by the way, those who don't know, COMEX in New York, that's us, has 100-ounce bars. They're all different sizes. They're standardized, but they're all different sizes. What if you could get rid of that, all of that, by saying you've got one thing in the digital world, it's 1 gram, and it can move around frictionlessly in this virtual space. You can still have your COMEX bars, you can still have your LBMA bars, and you can still have your kilo bars.
I was just wondering if you could comment on the legal structure for all that mint. Is it wholly owned and backed by the UK government such that if I actually wanted to take delivery on my gold, that I can do that and the UK government ensures that that happens?
Yeah, it's a really interesting organization. So they are 100% owned by Her Majesty's Treasury, and yet it operates in a PLC structure, which means it's a for-profit commercial entity with its own board and financials. You can go download their financials. They basically have said in their brochure for RMGs that you will have physical gold, which is completely reserved, meaning it's not lent out, it's not rehypothecated, it is there. And there will be a website where literally if you want to take your 1 RMG and convert it into 1 gram of gold physical, they will do it for you, but it will be a fee. So yes, that physical convertibility is there. I think we need to be careful about that. At the end of the day, the Royal Mint is saying that they will hold the gold for you in their vaults. I wouldn't go so far as to say it's government-backed, right? It's a government-owned entity, but it is putting the gold there in their vaults for you. Sure, hi.
We've seen the $15 billion come up a lot today. Is that fairly lost to just clearinghouse
So do you remember the R3 and then the one earlier this morning, was it Microsoft that may have had it, with lots of people at the banks? That's actually where a lot of the costs are. And then there's intermediaries. Clearinghouses like ours are actually surprisingly, not to say that we don't have room for improvement, we're surprisingly efficient compared to the banks in the sense that we're a 40 billion market cap company with about 2,700 people globally. Most banks, if you know, there are tens of thousands, if not hundreds of thousands of people globally of these banks. Now, some of them justifiably are much larger, but it's really about the people, the intermediaries, and the legacy systems. If you actually look at the financials of a bank, you ever have any free time? Suggest you do. Look at their technology budget. Most of their technology budget goes towards maintaining of legacy systems. It's shocking how big these budgets are.
Okay, so this next piece is we're in a break, but I want to remind you, so we've started during the break, you're going to have a chance to go continue to ask questions of Sandra, also Mark, who spoke before Sandra. They have classrooms assigned to them. You can go to these classrooms during the break and have a more intimate Q&A session with them. And we're going to continue that throughout the rest of the conference, that each block of speakers then is assigned classrooms during the break so that you can go talk to them. And if Tim is here, is Tim still here? I don't see him. If anyone wanted to ask additional questions of Tim, they could do it just here in the auditorium. And then when we come back, we'll have another announcement about the breakout session for crypto economics. So we'll see you back here at 2:50.